Currently, business shaping up well, looking to maintain those margin levels. US, Europe, both of them business shaping up well. Focus on one more company then, and Escorts is the company right now, the stock in focus, to understand how the tractor demand is shaping up as well as the overall business trajectory. We've got Mr. Rohtash Mal, the Executive Director and the Chief Executive Officer at Agri Machinery Group of Escorts, who's joining us right now. Mr. Mal, thanks very much for being with us on Market Sense right now. Let's start with the obvious question. Given the monsoons, do you expect a significant impact on demand in the next 3 months?
Firstly, the monsoon looks good. The early markers of the monsoon on the western and southern coast are good. Early showers have begun, and the meteorological department is also reporting between 98 and 102% of normal monsoon. So that bodes well. There has traditionally been a good correlation between a good monsoon and good tractor demand. Indeed, a good monsoon and good economic activity. So I look at the coming few months good. I think the psychology will be a good monsoon means more buying power, and for all kinds of goods, particularly tractors in the rural sector, I see buoyant demand, as has been the case in the last 18 to 24 months.
Right, Mr. Mal, but auto sales in May have been modest. We saw the slowest growth in almost 20 months. Do you believe we might see a harsher blow to volumes than what was previously anticipated?
I'm not either equipped or qualified to talk about the auto sector as such. But let me just say that on the back of very strong growth numbers, there usually is a moderation of sorts. So we could be seeing that. But more importantly, I am seeing a situation where because of absolutely amazing agricultural output in the last few months, prices have been under pressure. So you do see a situation when you multiply volumes and prices that are kind of declining, in some cases between 15% and 30% depending on the commodity, or in the case of cotton, in the few months it's gone down to by about 40-odd%, then the usual psychology is a bit of a wait and watch. So yes, even as the numbers show it, I do see a moderation of sorts happening, and I think it just could be the pause between a growth again, because overall economic signals are looking good.
All right, overall economic signals looking good. But in terms of pricing, do you have enough pricing power to pass on the steady rise in input costs, Mr. Mal?
Two things. I'm going to connect it to your previous question when you talked about a moderation of auto demand, and therefore the pricing power of ancillaries also tends to moderate a little in situations like that. I'm already seeing a situation in this quarter and the upcoming quarter where the price or cost increases may not be as strong or will not be as strong as we have faced earlier. So the first thing is the assumption that the cost growth, the rapid cost growth will remain as it is. That assumption is kind of under question. And the second part of your question is, would we have the pricing power? Yes, I think without a doubt, our position in the market, our capability does allow us in a calibrated and calculated fashion to selectively pass on these costs to the market, and that's very much in position.
Well, Mr. Mal, the market has been abuzz regarding many corporate developments that could happen, from land sale to a subsidiary IPO. Is there any corporate development that we can expect over the next 3 months?
Look, I don't understand the word corporate development, but as far as land is concerned, let me categorically rule that out. This kite has been flown for many years now, and once again I'm happy to state categorically there's nothing on the anvil. Now, as far as other corporate developments are concerned of the kind that you mentioned, there are usually works in progress. There are processes in the organization, there are proposals in the organization, but nothing of impact as such, serious impact like this as such. We are in 3 high growth businesses: railways, agriculture, construction, and these are chugging along very, very nicely indeed. So that's about it. And to just close that question of yours, no, I do not see any serious corporate developments of the kind that you talked about on the anvil in the next few months or indeed a year.
All right, I'm just going to probe a little bit more. So what you're saying is no major development should be expected by the market when it comes to Escorts?
I don't believe there is, as far as land is concerned, let me rule that out completely. As far as the others are concerned, as I said, a lot of proposals happen inside, they get processed, they get taken to the board, but we're not ready to announce anything in the near future.
All right, Mr. Mal, but then finally give us a volume target for the current financial year for Escorts.
Without being forward-looking, I do believe that we will be turning in the financial year a very healthy double-digit growth over the previous year. And I would hesitate to talk harsh numbers, but a good, healthy double-digit growth, maybe between 12 and 15, 16, 17%.
All right, Mr. Mal, we'll leave it at that. Thanks very much for joining us. Volume growth of about 12 to 15% for the fiscal is what you can expect from Escorts. Coming up on the other